Good morning, ladies and gentlemen, and welcome to the show. Listen, I'm glad to have you guys here. Today is the 21st of Friday of February 2020. Now, what we want to talk about is, and what I'm going to talk about, first I'm going to do the markets, and then we're going to talk about something. And this is of major importance. There's two things happening simultaneously. Each one of these things is like a train on the track going 90 miles an hour, but they're both going in opposite directions and they're heading toward one another on the same track. I'm going to talk about this and I'm going to explain it to you guys coming right up after I get the markets done. So let's get started and let's look at the markets. Start the charts right here. Take a look first at the silver price today. We're looking at up 20 cents on the day so far. 18.54 today. But it's not keeping up with gold. I'm telling you, it's falling behind a little bit, Even at 18.54, which looks darn good to us because, I mean, you know how low they had the price suppressed all those years, Remember back during quantitative tightening how low the price on silver and gold was? Let's take a look at gold now. 16.45 and climbing. It's up $26 on the day. And it's starting to do what I explained to you guys it was going to do over the past number of months, Let's take a look now at cryptocurrency market capitalizations. And cryptocurrencies fell back a little bit, from what it was. But the Bitcoin dominance is at 62.8%, and the market cap is $281.6 billion, with a Bitcoin price at $96.90. We're looking at 73.51 for Litecoin, Ethereum at 263, XRP at 27.5 cents, Bitcoin Cash at 377, and Bitcoin SV at 286. Now we're going to move on and take a look at the Dow Jones today. It's down 251 points. This is just the beginning, in my estimation. And I'm going to explain to you why, very shortly as soon as I'm done with these markets. But we're looking at 28,968 on the Dow today, down 251.82 points, or 0.86%. Let's take a look at crude oil. It's down 93 cents, or $1.70, 1.73%, which is quite a large drop. 52.95 for crude oil. So we're going to see this crude oil price continue to drop. Crude oil depends tremendously on demand. Okay, here's how it works. The oil producers out there, OPEC, United States, all the major oil producers, Russia produces a lot of oil. They produce just enough oil for each single day of consumption for the world. The world consumes a very set amount of oil, and they produce just enough oil. If they produce more than enough oil, the oil price falls. If they produce less than enough oil, we have oil shortages. Thing is if usage of oil drops off because people are not moving, like cars are not moving, trucks are not moving, cities are empty, people are staying home, they're not consuming oil, even that right down to the taxis that run around in your city, whatever city you live in. Those taxis consume oil, and if oil consumption drops, then price falls. It falls because it's not being used, and that leads to overproduction and leads to inventory builds within the oil community. Okay, so we're going to see this continue. We're going to see a drop in oil prices continue. Let's take a look now at U.S. Treasuries, and they are scared. Investors are really scared, Look at them running into the Treasuries. But this is a dollar-denominated asset, and but it's probably, if you're going to be in dollars, this is the safest place to be, in dollars. If you're determined that you're going to stay in dollars and you're not going to explore any of these options out of the dollar, then this is the safest place to be, because the Treasury, U.S. Treasury, will support this to the very end. In other words, they'll pay. They will pay up. They will not let a default happen on U.S. Treasuries because of the implications of that. So the counterparty risk then is only the good faith of the United States government, and they will cover this. But the big question mark is, how much will the dollars be worth, the dollars they're covering it with? So we're looking at massive falls in yields today. U.S. 30 years lost 6.7 basis points. U.S. 10 years lost 5.9 basis points. You know there's a crisis happening when you see these yields falling when they were already low like this. Now let's take a look at the dollar index, if the page will load. Okay, there it is, 99.41 on the U.S. dollar index, and the dollar right now is dropping like a stone. It's dropping like a stone right now. Seriously, going straight down. We'll have to wait and see how long that continues, but it's really dropping fast right now. I haven't seen it drop like that in a long time, like just falling, you know? Okay. Here's what I wanted to talk about. Let's switch the charts off, and I'm going to talk to you guys about this and explain it to you the best way I can. We got two trains heading at one another at 90 miles an hour down a track. One train is the enormous debt bubble that was created on new debt that was taken out from 0% interest rates for like 12 years. And it created what's called an everything bubble. This everything bubble is absolutely enormous in the debt markets. And everything that's attached to it has counterparty risk, meaning that you might think you own something, but when everything starts to be mark to market, at that point, you might find out that you don't actually own it. Like, say, SLV, for instance, you know. And when it all starts to melt, the system starts to melt, you might find that your shares in SLV do not yield you real physical silver. Okay? That's the first thing, right? So we got this one train, which is the enormous debt load, the oversaturated system that's completely over-leveraged. It's called the everything bubble. The other track and the other train that's coming at it is the very fact that one city after another in the Pacific Rim, down in the Southeast Asian area of the world, one big city after another, Beijing, Shanghai, Tokyo, you name it, is starting to go offline. Quite seriously. One by one, they're being crippled, these enormous economies in Southeast Asia. And this is a trend. I don't see this trend letting up anytime soon. This is the other train going down the track at 90 miles an hour. These two trains are going to collide simultaneously. And the situation it's going to cause is going to be nothing less than absolute pandemonium. Okay, guys, so this is why you got to prepare, because this is going to be not a single calamity. It's not one train. This is a double train calamity. Two trains hitting head on at 90 miles an hour. It doesn't happen until it happens all at once. And when it happens, it's absolutely devastating. Thank you guys for listening. Like and subscribe. Give me a thumbs up. And we'll catch you guys in the next video. Bye-bye.